All right. Well, welcome everyone to the webinar today. The topic is Accounting 101 for growing CPG brands, not just any CPG brand, but those of you that are growing, and hopefully that's all of you that are here today. Stoked to have an awesome guest with us, Andy Nelson from Squire. Tell us about Squire and tell us about yourself, and then we'll dig into the questions.
Sure. Yeah, of course. So I work at Squire and Company, which is just up the, excuse me, don't know what's going on with my throat. Just up the hill from the Fiddle offices in Orem. We have a Salt Lake and an Orem office, and we are a regional CPA firm. So accountants first, CPA firm, focusing on three practice areas: advisory, tax, and audit. And everyone knows about tax and audit. That's what you think of when you think of a CPA firm. But we kind of set ourselves apart because we emphasize in the advisory group, which is what I'm a part of. And what we do in the advisory group is really anything from outsourced accounting to CFO services, bookkeeping services, payroll services, all the way to technology solutions in the form of ERP. So we're a partner with QuickBooks, Microsoft Dynamics, Microsoft Great Plains, and Oracle NetSuite, all of which Fiddle has ties to. So, and specifically to narrow down further, what I do is I am a CPA first, but I lead out on the integrations team, helping to automate accounting processes by integrating data between two systems, typically an accounting system and a point of sale system or an e-commerce platform like Shopify, BigCommerce, Amazon, etc. So that's a little bit about us. And my story specifically, I have about 13 years of industry experience as a corporate controller, and decided to do things backwards and go to public accounting after getting industry experience. And so, Fiddle, we've had some dialogue, and they were a sponsor at an event we just had. And, I know Morgan very well, and we like their product, and I'm here to answer any questions you have related to
accounting. Okay. Awesome. Well, thank you for taking the time to be here. And, what you talked about with your kind of skill set, obviously you've been in numbers for a long time, just kind of at varying different levels for different brands and in different functions. And you mentioned the aspect of making tech communicate, right? And like Shopify, BigCommerce, NetSuite, Microsoft, that kind of stuff. That's one of the big things. That's one of the big problems that we're solving at Fiddle, and just trying to make it easier for brands to be able to keep track of all the numbers that are important to their operations. And so today's focus on accounting, want to try to just keep it as general as possible, and but also keep it focused on things that help brands, things that help CPG brands. And so those of you that are attending, if you have questions at all, anything specific, like off the top of your head right now that you want to ask, go ahead and throw that in the chat. I'm going to get us started with some questions, but as we talk, I'll refer to the chat and try to bring up those questions as we're talking. And if I don't get to them as we're talking, I'll definitely get to them at the end. But we want to make sure that this is focused on the things that you want to learn about most. So again, just go ahead and throw those questions right in the chat if you have those. But to kick things off, I'm going to start with the question that's kind of a softball question, but I'm just kind of curious where you take it. And that is, what are the business benefits of having good accounting practices?
I was muted, sorry. So that's a $1 million question. That's a good softball question. But here's what I would tell you. So, a lot of new up and coming or growth companies will have financial stakeholders. Those could be internal or external. You have, the board to worry about, you have investors to worry about, you have banks, you have all sorts of, potentially compliance. If you're in a regulated industry, And so, having clean accounting practices and the ability to provide support, real-time support, accurately for your numbers to corroborate what you're asserting with your financials is paramount. And actually, it seems counterintuitive, but the time spent on getting your books clean and in a position where they're supportable, there may be an initial investment, but our experience has been that when there's time for an acquisition or a transaction accounting event, like you're selling or acquiring, having really clean books to hand over is paramount. That's kind of a softball answer to a softball question, but that should be the focus of the group, the accounting group or the finance team, when generating statements. Is if I'm going to present a number to an external customer, I need to be able to support that number.
That totally makes sense. And just speaking from personal experience, before I joined Fiddle, I was a partner and kind of the main marketer at a CPG brand, and an online skincare brand. And we'd always just done our accounting and bookkeeping in Google spreadsheets, but realized quickly as we started to scale and add more channels that was becoming a huge hassle. And like literally tax time would take me like 3 or 4 days because I was like pulling in all the credit card statements, exporting stuff from Shopify, pulling stuff in from PayPal. We had a few transactions in Venmo, right? Like trying to get it all into like these spreadsheets to do our taxes. So we finally decided to implement QuickBooks Online. This was probably about 2 years ago. And when I went to exit the business and transition it to my partners, having those clean books set up made it so much easier for us to know exactly what was happening in the business from a number standpoint. And that made that transition a lot easier and a lot more seamless because we knew what the business was worth, and we were all on the same page because the numbers were all coherent and they were all being tracked properly. All of our COGS, like all of the numbers that you care to track when you're a CPG brand. And so if any of you have the ambition to eventually exit your business, and that could mean you sell it to somebody that you don't even know right now, or maybe you've got partners and you want to sell it to them at some point. If that's a goal that you have, having your numbers just 100% spot on as soon as possible is going to be one of the most effective and fastest ways to get to that point. So with that in mind, and obviously there's a lot of other reasons to make sure that your accounting is being done properly. But let's talk about what are some of the most important, just kind of from a basic standpoint, think of kind of smaller brands, like maybe have, a couple, like, let's say like 3 to 20 employees. What are some of the accounting best practices that they should be focused on?
Yeah. Yeah. Taylor, what I would say first and foremost, think of your low hanging fruit, right? I would say, what is your cadence for a month end close? What is the expectation for producing financials? I've worked for or with, at Squire, many different companies that have different styles for this. But what I would say is the more successful companies from a preparation and a financial health standpoint, more of them have like a regular cadence. So for example, I really like a business day close. So I'll say by the 5th business day, we will have draft financials prepared for management to review and give comments on. So that's what I would say first and foremost. Having a carrot to dangle in front of you to make sure that you're on a proper cadence to get those financials produced. I know it seems simple and straightforward, but that is one tip I would suggest. From there, as you become more nuanced, policy is freedom, is what I would say. So, from there, I would look into what is our collection policy? What's our cash pipeline in? How are we ensuring good AR collectability? Are we running analytics on that? Are we incentivizing team members to collect on cash? Kind of creating these processes, these business processes for our core functions as a finance and accounting team Purchasing policy. Who is a purchasing agent of the company? Who has the authority and privilege to sign a contract that obligates the company to a commitment for X number of months or years? Do we have approval thresholds? When we disperse payments, are there controls in place where there's a approval for new vendors? There's dual approval and positive pay controls so that you make sure every penny you're sending out the door is going to who it's supposed to go to. And then, from there, we can talk about the more advanced things like, how's your transactional accounting? Are you booking summary journal entries to record your sales? Or are you getting transactional detail into your accounting system so you can start to do some data mining and analytics on what am I selling? When am I selling it? And what's the market sensitivity to price and cost, that sort of thing. So again, we could talk for hours on this topic alone, but those are some ideas or some kind of good places to start when thinking about best practices for accounting.
Okay, I love it. On the opposite side of the coin, what are some things, maybe some of the areas where you see businesses dropping the ball most often, like some mistakes that brands are making when it comes to their accounting?
Yeah, so with accounting, again, I would say policy or lack thereof. Allowing users of the accounting system, which can be a spreadsheet or it could be Oracle, it goes all the way up the chain, but not having tight and finite controls around who can do what to the financials is generally where we see a lot of cleanup efforts that, they would call someone like Squire to say, we have all these transactions. There hasn't been oversight here, and employees are just booking things where it makes sense to get like a cash reconciliation done type thing. So not having formal policies, I know that's kind of a cop-out answer because I said having policies is a good thing to do. Not having them is where we see a lot of cleanup efforts. And then like long-term strategy in mind, as you're sometimes we're victims of our own success as growing businesses, and we're launching new products, we're going into new markets, and accounting can sometimes be an afterthought. Do we have a pricing model set up for how we're going to price the SKU? Do we have a supplier pipeline intact from a supply chain standpoint? Do we have to manufacture that? What are the costs to do that contract manufacturing? Anticipating things like that, and really, just to put it bluntly, to not react to business decisions from an accounting group, but to anticipate and plan. Is reaction generally creates more problems down the road for the accounting group in the form of inaccurate financials or an adopted process that was adopted out of haste because we're launching the UK market tomorrow, so we just got to get it done type thing. So when you have that time to plan, make banking relationships, anticipate, like a SWOT analysis almost of threats and strengths, threats, weaknesses, opportunities, then really that's where you can shine. If you can get to that level of thinking and plan ahead is what I would say. Okay,
perfect. So I like a lot of what you just said, about having policies and systems, or I guess having systems and then policies for those systems, having as many of your relationships with suppliers and co-packers and manufacturers kind of put in place, and also being as proactive as possible, right? So that you're not reactive in situations where it can come down, where it can kind of hurt you and come around and bite you down the road. I think those are all really crucial things that you mentioned. Let's kind of shift gears and focus on kind of put yourself in the mindset of somebody who is maybe a solo operator of their business, or it might be them as the founder, and maybe they have like a team that they outsource some stuff to, but they're still managing like all of their books and that sort of thing. Where would somebody like that start as far as making sure they're not ready to hand off the books yet, but they also want to make sure that they're implementing some of the systems that you're talking about? Are there like any resources that you would recommend, like maybe books or like blogs or podcasts that people follow where they can kind of start to create some of those systems on their own?
Yeah, so this is going to sound like a shameless plug, but it's really not. Squire in the past has done lunch and learns that are open to really anyone, and we do a lot of industry related events where we talk about. I'm a member of the e-commerce and manufacturing industry group within Squire, where we meet monthly as a group to talk about strengths, weaknesses, opportunities, threats, etc., that are specific to that industry group. And I am happy to distribute any events that we have for those types of things to tailor. And sometimes it's as generic as 1099, processing, that it has nothing to do with the industry group per se, but we host a lot of these events, and that's a great place to start. Um, I would say, as far as books and online resources, putting me on the spot a little bit. I do have some that I can send over to Taylor, sorry, but nothing concrete that comes to mind that, if you're looking for just like a general starter. But what I would say is, from a standpoint, we see a lot of sole proprietors, even, that they have a great business idea, they start their business, and it's just them, like Taylor's saying. And this is where, partnering with a professional services firm or just a bookkeeper, for starters, is a great solution, because what that allows you to do is focus on your business and what you know the best. And present company excluded, perhaps, but a lot of our business owners and clients will come to us, and they will readily admit that they're not the authority on lease capitalization guidelines or whatever. And so having someone in your corner that you can call if you're not ready to like fully transition to an external resource, we have lots of clients like that. But find a bookkeeper or a resource that can kind of have your back and advocate for you and help you to anticipate things. Be having their ear to the ground of the industry and of the accounting profession to interpret your business and how adopting a policy or a specific accounting guideline can help your business. That's what I would say. And what you'll find, a lot of people will find, there's the stigma with a CPA firm or a professional resource like Squire that, oh, well, that's going to cost, tons of money, thousands and thousands of dollars. And the reality is, having a firm like that, rather than hiring a resource, having an external resource allows you to scale up and scale down in real time. You don't have to hire and fire. You can ask just a question. You can just say, I'm thinking about buying a new piece of equipment, a new die cut and conveyor belt system, and I could really use some advice on, even negotiation. We can stand in with you or any resource can stand in with you for half an hour to an hour, and then we're out of your life again until you have another question. So I know that sounded like kind of a sales pitch. I didn't intend for it to sound like a sales pitch, but having a resource like that is invaluable, whether it's internal or external.
For sure. No, for sure. And I think it's cool that you mentioned kind of the services that you guys offer, and definitely share with me any like opportunities for lunch and learns and that kind of thing. I can pass them along to the group.
Sure.
And I will say that I think there's probably different levels too of having somebody help you with your taxes and finances. Like, again, going back to my time when I was running a CPG brand, we outsourced our tax preparation, but the actual bookkeeping, I had an accounting firm who specialized in CPG brands actually trained me on how to do it. And as much as I hated doing it, because like QuickBooks, no matter, I feel like you just have to be in it a lot in order to love a software like that. And I would always have questions and that kind of thing. But it really helped me understand the underlying numbers and kind of accounting practices that would eventually help us scale the business more. And so I think there's kind of there's probably a little bit of a spectrum, like the way that I asked you, if you're doing it all on your own or if you're outsourcing it, makes it seem like you have to do all of one or the other. But there's kind of a spectrum where you can outsource part of it and do part of it. And kind of as your business grows and as your bandwidth decreases to be able to manage the stuff on your own, you can, outsource and start to kind of partner with someone, you know, commensurately to where you're at on that spectrum, if that makes sense. So obviously we're in business because we want to provide a great product to our customers, but we also want to generate profit and, fund the lifestyle that we kind of envisioned for ourselves when we started a business. And a big part of that is saving money on taxes and just being smart about how you, spend your money throughout the year, and then the things that you write off and don't write off and that kind of thing. What are maybe two or three things that you see people not doing? Or I'm trying to think of a good way to ask this. Like, what are some of the things that people should keep in mind in order to maximize their savings on taxes? Let's phrase it that way.
Sure. So for full disclosure, I am not a tax person. I have my wife do my taxes, and I kind of look them over. That's how much I don't. We just don't get along. Let's put it that way. But what I will tell you is, capital expenditures are big opportunities to save on tax. There's bonus depreciation to consider. If you're looking at, if what I would call is, if it's a material piece of equipment or a fixed asset, like buildings, manufacturing equipment, leasehold improvements, if you're renting a space, a large computer resource like a server or something like that, it's probably a good idea to get the advice of a tax professional that can comment on accelerated depreciation methods that allow you to mitigate your tax exposure. There's also research and development credit that, I would say, as best you can, whoever is tracking your books, whether it's yourself or someone else, have them keep very close tabs on expenditures related to research and development, because there is some research and development credit that you can utilize, as well as meals and entertainment, tracking those very separately and tightly. Those are three kind of, top of mind areas that we think of when we talk about mitigating tax exposure and tax planning. These are things to consider. And then also from a sales tax compliance, making sure on the front end, when you're capturing sales tax and sales use and excise tax, if applicable, you're capturing that accurately, and you have a plan in place to remit that to the states that you have nexus in. And a shameless plug, Squire has a great tax compliance firm. We can even recommend some softwares that'll automate this for you, like an Avalara or a Sovos. So those are things that when I think about, when I go into as a controller, outsourced controller, these are things that I talk to my clients about.
Perfect. Okay. So I think this next question will be really good for you, since you're really heavily involved in kind of the tech side of things. Most of us in business use spreadsheets as much as we can before we actually buy like software that's meant for something, right? Because spreadsheets are just so flexible. We can do so many things with them, and I think there's always going to be a place for them. But because they're so flexible, and because you can kind of do whatever you want with them, and because most of us aren't experts in how to use them, when it comes to tracking our finances, they can there's kind of a tipping point where they go from helping us to hurting us. And I'm curious to know, just kind of based on what you've seen, what are some of the signs or some of the things that brands should look for to know, like, okay, maybe these spreadsheets aren't going to do the trick for the growth that I need to have, and it's time to look into different software. So without like talking about maybe the different types of software that they could look at, like what are just some of the signs that like you kind of maxed out your spreadsheets and it's time to look into software? Does that make sense?
Yeah, it does. First thing I would say is there are low cost options and there are high cost options, and we don't need to get into those right now. But I think businesses would be very surprised at just how economical like a QuickBooks Online really is, and the I would say in 99% of cases, I'm going to go on record and say that spreadsheets are dangerous because there's no control around deleting a line and all of a sudden your net income's half of what it was yesterday. And version control, there's not a lot of like audit trail or tracking who changed this number to this number, that sort of thing. So what I would say is first and foremost, find the time. And I'm going to go back to an earlier question that you asked, Taylor. What are threats or what are pitfalls? And I would say on a super high level, it's the business as a whole not emphasizing the need for good accounting. So because is it fun to spend money on a new piece of equipment that can help us produce goods faster? Yeah, that's fun. Is it fun to buy QuickBooks Online at the nominal cost that it is? No, it's not fun because it's like, well, that's accounting software. Why would we spend money on accounting software? But if we can show the value, even if it's just a sole proprietor and we're showing ourselves, if we can show the value in the ability to pivot and produce cash flow statements, income statements, and balance sheets to say, how are we doing real time? That's where a spreadsheet loses, because unless you take the time to program basically an accounting system into a spreadsheet, the superior method is to go with an accounting software that does it for you.
Gotcha. Okay. That's a really good answer, and makes a lot of sense. Last question that I want to ask before maybe we open it up to the audience, just to kind of wrap things up. And maybe I should have started with this because it's kind of something that's on all of our minds that are in the CPG industry, and that is all of the kind of backups and issues with the supply chain globally. Obviously, there's a lot of implications for accounting and finances and inventory, and from like a number standpoint and planning standpoint, there's a lot of different things that we could talk about when it comes to that. And I know that you guys just hosted an event that we were at a couple of weeks ago, and that was one of the main topics that everyone was talking about there. But what are some of your thoughts on just the current supply chain issues, and kind of from your seat how you're seeing it's affecting businesses from a finance standpoint and how to navigate them?
Sure. Yeah. I know we're close to time here, so I'll try and be brief on this answer. But in short, it is a big problem that we're seeing, and we're seeing brands that are reliant on import-export type supply chain are starting to see that impact in their businesses. So it's definitely not this hypothetical. It's a real problem, and it's out there. And so what we've found, what I will say is, again, this is a bigger topic for maybe another webinar, but one thing that we've seen clients do is to partner with their suppliers and to kind of establish this safety stock. And that's difficult to do sometimes when we're defining a relationship, or maybe we don't have the tenure in the industry to command that sort of agreement from our suppliers. So it might take some capital as like assurance to do prepayments and whatnot, but to work with your suppliers and really work with them as partners to because they're having the same issues, but to work with them to say, how can we collectively create a plan for supply chain. It's like a disaster recovery plan. In IT, if your server goes down, what do? Do you just wait till it comes back up? No, generally speaking, there's another server or hot site, we call it, that's ready to just plug in. It's like a backup generator. And so that's what we're encouraging businesses to do. And what we're seeing successful businesses that are planning successfully have a disaster plan for supply chain issues. Like, what are our bottlenecks? Identifying our bottlenecks. Are there alternative suppliers that can get this resource in to complete our finished good? That sort of thing. But the summary answer, the dumb answer is have a plan in place. Have a plan in place. And the keynote speaker at our conference that Taylor referred to echoed that same sentiment. She presented to a university a few months ago and asked by show of hands. This was like mid-pandemic, and asked by show of hands, how many of you, who they were all business owners, have a disaster recovery plan for their supply chain? And no one raised their hand. So again, it's that proactive, not reactive thinking. And I know that's kind of a non-answer answer, but working with your supplier to collectively, as a partnership, come up with a plan, and maybe there's scenario A, B, and C there, is what I'd say.
I love it. I love it. And I think that's a good non-answer to give because I think that, and this is maybe getting a little too deep and philosophical, but I think a lot of the kind of the pain and stress that's being caused by these supply chain issues is caused by the media. And they're talking about all these different aspects that are being affected by it. And some of the stress that, the brands are feeling might not be from things that are actually going to affect them. It might just be something that's affecting a different industry or a different vertical. And so to kind of, if all it does is it causes you to like create a plan, like a worst case scenario plan. Tim Ferriss calls it fear setting. Again, getting a little philosophical, but it's kind of one of the principles that Stoicism is based on, and that is, you just imagine what like the worst case scenario is, and then all of a sudden, and then you're comfortable with that, and you're like, okay, like, and then your brain gets into like problem solving mode, and it's like, okay, if this happens, like if I can't get my glass jars from this supplier in China, who else can I get it from? And all of a sudden your brain starts thinking of solutions. And I think it actually will end up benefiting businesses more in the long run, because they're going to be better prepared to, kind of face these challenges if they ever come up again. So I don't want to wax too poetic on that, but I do think that answer is really good and effective for just all sorts of areas of business and life. So it doesn't look like we have any other questions. So we'll go ahead and kind of wrap things up. Andy, tell us how people can reach out to you and Squire if they have questions about accounting, bookkeeping, finances, that kind of thing, and are curious about having you guys help them.
Sure, no problem. So I'll include my email here in chat. That's the best way to reach me. And whether your text or your question, first of all, a huge thank you to Taylor and Fiddle for involving me. We love Fiddle and we love the partnership there. But any questions at all, topics that we discussed today, even tax questions. I'm not going to be the guy to answer your tax questions, but I have a bullpen of really talented peers that are very passionate about tax and can answer any of those questions you might have. And so please don't hesitate to reach out to me, and I'd love to talk to you further about anything that's really happening with your business or that you anticipate happening with your business, plugging that proactive, not reactive thinking. And it's like my wife always tells me, fail to plan to fail type thing. So I'm not saying you're going to fail, but an ounce of prevention is worth a pound of cure type thing. So it was great to meet you all, and appreciate the time, Taylor.
For sure. Thank you, Andy, for taking the time. And I'll just go ahead and throw in a quick plug for Fiddle as well. Most of you that are on the webinar are already familiar with what we do at Fiddle, but if any of this conversation about inventory, supply chain, production, tracking your numbers, that kind of thing. If any of that kind of brought up maybe fears that your systems aren't up to par, maybe you're using spreadsheets and, like Andy was saying, you don't have that kind of those safety measures in place, that quality control. You're not even sure if those sheets are kind of computing things properly. If you run into stockouts, if you kind of have a hard time keeping track of your suppliers and lead times, MOQs, that kind of thing, that's what Fiddle was built for. We're kind of a middle ground between spreadsheets and NetSuite, which was what you would graduate to after you use Fiddle. But it's a way that you can kind of see all of your numbers and streamline all of your inventory and production operations all in one place. So there's going to be a link below the video where you can schedule a demo if that's something you want to do, where we can kind of walk through your business processes and you can see if Fiddle makes sense for you to implement in your business. We'll have a link to Squire's website as well for anyone that wants to connect with them. And again, thank you to all of you for taking the time to be here today, and we'll see you next time. Thanks.